Good morning, everybody. Welcome to the Trading Market Technicals Morning Call video for Tuesday, March the 26th. Quick admin note: Friday markets are closed for Good Friday holiday, so just want to make that clear to everybody. We do have a shortened week here, so we have 3 more days of trading. Could get interesting here. Really could get interesting, or markets could really be dull for the next 3 days. So markets have consolidated, as you can see here. This is the 10-minute chart of the spiders for the last 8-9 trading days. Really just choppy. Open down, breaking back up again, but really choppy sideways consolidation trading. So the markets can really go either way here, guys. Markets can break out at least one more time, take a run higher, and or start to break lower. And we don't know what direction that this market is headed here. I do think that the markets are carving a top. This type of price action gives me a hint that we may have a tradable top in place, but again, we won't know that until we start breaking some real key pivotal lows. So let's go run into the numbers real quick. Dow down 64, S&P down 5, gold down 7, Nasdaq down 8, and the dollar up 64 cents. So that's basically on news, on the Cyprus news. Over the weekend, they came to some sort of agreement on a bailout, and I guess the Bulls were a little bit nervous on the terms and conditions of the bailout, and I think it's kind of spread to probably some sort of a European contagion, saying that, wait a minute, if this can happen at Cyprus, maybe it can happen in the UK or anywhere in Europe as well, putting tax levies on deposits. So obviously, this is not really the greatest news in the world, but I don't think Cyprus, small as it is really much of effect. But it's really what the market participants really think and how they react to it is really what counts here, okay? So just keep that in mind. All right, so terrible price action, as you can see, and that's why I always say, please trade the best setups. And you know what? You could make money in this market at any given time. You just really need to be nimble. You need to say, wait a minute, nothing's going on here. Let me just back off. Let me look for my the trade setups that work for me, basically to your trading plan. And if there's nothing to be had, you don't see anything, sit on your hands, wait for the next setup. And if it has to be the next day, so be it. But at least you're nimble, you're fresh. Money's coming into the account slowly, but still coming into the account and making money. That's what counts. Once it gets easy, it gets really easy, guys. That's what I wanted to make a point here. All right, real quick, we're going to run into the charts. Honestly, nothing has changed here. This is going to be a quick one. U.S. dollar, we broke lower. That was the morning pop in the markets, and then all of a sudden, safe haven flows came in, and look at what happened. Now we're back into this area. So we're holding here. So this, to me, is bullish, and if the dollar continues to start breaking higher, you're going to have a real tough time in the commodity sector, and that's why I had mentioned GDX. I like the GDX, but if the dollar doesn't start to sell off and come down to this area, then you're going to have problems with the GDX and even oil, and that's why right now I think GDX is trying to carve a bottom out. But I think that we need to really see the dollar start to really break down in order for that GDX to really move. Other than that, maybe for a day trade, if that, but I'm staying away from the GDX right now as far as gold and gold stocks, only because the dollar still is well bid up here. We need to see the dollar start breaking 82. Once it breaks 82, then I'm going to start looking at the commodity sector again. Quickly, let's run through some of the indicators. And as you can see here, the bullish percent index highly elevated overbought, break below our 8-day momentum indicator. So this one on a sell signal. So the bullish percent SPX is on a sell signal. Stocks above the 50-day moving average. As you can see here, we had divergence, market moving up. Stocks did not move up and started breaking down below the 50-day moving average. So we've been showing you this chart for at least over a week here. So we do have some divergence forming. Still overbought and still need to come in way low before markets can find some sort of a bid here. VIX just kind of sticking around here. We did get a nice little pop in the VIX, but now we're consolidating between 13 and 14. I want to see the VIX break above this 1540 area and start to really get going, and then that would really entice us to get the markets to move lower here. So until that happens, VIX is just chopping around at the lows. Here's a CBOE just to give you some sort of sentiment, and look what's happening here. Big down, up, down, up. down, up. It's just really kind of crazy. Usually you have markets hit down and they start making higher lows until we get some sort of fear coming in the markets, but still no fear. So this is still neutral here at 89, no fear at all in the markets. So the markets are still well bid up in my eyes. So we really need to see markets start to break some real key pivotal lows on volume. I think that'll put some real fear in the markets, and that would really entice a lot of longs that bought up in this area to start liquidating. Here's copper. Copper broke back. Nice bear flag here. Here's our ratio chart for copper to SPX. We did break higher. That is a little bit of a good sign. However, we're still below the large symmetrical triangle. Need to get back in it and start making higher highs and higher lows to really get to really give at least help to the equity markets here. Right now, copper's not doing so. Is lagging in the markets here and pushing the markets lower. Okay, let's run right into the charts. Just want to show you the GDX real quick since we've been covering this. Had that inverted head and shoulders, that slanted neckline right up in here. We are now the outside of this downtrend channel, which is good news. We did touch the outside of the upper end of this channel right to the penny, and we staying above it. Now, if we start to break below this 3660, this inverted head and shoulder is not going to be valid anymore. So just keep in mind, it is a small inverted head and shoulders anyway, but nonetheless it is, and it does measure 3580 to 3880. So you got 3 points above 38. So you're looking at somewhere around $42 somewhere if that does work, if that were to play out. But again, it's all based on what the dollar does. USO bear flag still contained in this uptrend channel, but we still have this bear flag here. Nice little doji star, capped that with the 50-day moving average. Again, I think commodities is going to be a kind of a dead money trade until the dollar really starts to break down a little bit. All right, let's take a look at our spiders. Outside day reversal did have a big gap up. Excuse me, not a gap up, but we did gap up slightly, and then within a 15-20 minute range, sellers came in and started selling. And this is what you see here. You have slow grind higher, no volume, and then big red bar distribution day. So we are in this channel here, this sideways channel. So we've been locked up in this channel all of March now. So let's see what happens, and if we could break out of this channel, I think you're going to have a quick shot for the highs and then fail. And I think that's when the top would be in place. Or if we start breaking the 20 and 50 and break down below this long-term trend line, and then a quick back test, that would tell me that the top is in place in the spiders. Okay, and this is just quickly some of our support lines here. This is going to be a key area here today. It's going to be 154.50. Okay, that'll be key, and 153.60. That's going to be key right here. 200 period coincides nicely with this 153.60. Let's call it 153.60. 153.60. That's going to be our downside pivotal low here. Keep in mind, make sure you watch that today. That is going to really be there. 153.60 and 154.50. That's going to be your two downside areas. And, of course, the upside 155.30. And then, of course, yesterday's high 156.32. Okay, those are the numbers to be watching today. And, again, here's the 30-minute. As you can see here, Bollinger Bands are still wide. Needs a little bit more backing and filling to get these Bollinger Bands really tight, but we're really going to need to break out of this range here. This is the real area, 156.25, and of course right in here 154. Just call it 154. Really, we really need to break down below this to really get going one way or the other on a 30-minute chart. S&P cash, as you can see here, we're starting to break down on our CCI, and again, sideways consolidation, not a bad thing. Okay, not a bad thing at all. We're still within the 1555. Need to really break above that and test that 1575 and maybe even go higher. Maybe there's a catalyst out there, but right now markets are pausing and giving us real choppy price action, hinting to us that a top may be in place. Transportation sector, same thing. As you can see here, we did have an outside day reversal. Caught this upper trend line and the 20-day right to the penny. So we need to really start breaking down, making lower lows. Again, this is the sector that you want to see whichever way you want the market to go. If you want the market to go higher, we need to see this to break higher. And if you want it to go lower, we need to see this to start breaking down, breaking lower, and start breaking below the 50-day moving average as well. Okay, IWN daily chart, as you can see here, we're just above the 20 period. And again, sideways consolidation, outside day reversal. So to me, this looks like market wants to go lower probably today as well. But again, we need to get out of the closing basis on these sectors, today's opening, and then we'll have to reevaluate and see which way the market is headed. We are up slightly while I'm recording this early in the morning. Okay, XLF, same thing, guys. We're still well in this bearish rise and wedge pattern. 50-day moving average coincide nicely with the lower trend line. We need to start breaking below the 20, the 50, and then a quick little break lower and a back test and fail. Then we can start looking at shorting the banks. JP Morgan looks like it's actually forming some sort of a head and shoulders, with the right shoulder still really needs to be formed here, guys. But keep an eye on some of the bigger banks here, because I think there'll be a big trade in the next few weeks. Here's the diamond, same thing. As you can see, repetitive patterns, sideways consolidation, uptrend line holding. We're still below that, way above the 20-day moving average, and we're going to need to start really breaking down lower for this to really entice us that we're getting long here. All right, Apple hit that trend line I showed you yesterday, literally right to the penny here. Let me just fix this right there. Right, that's what we got. Right there. So now this could probably pause, chop around here, and that's fine for another move higher, and that's what you want. All right. So we came from 420 up to the 440 and way up to the 465. So a little bit of a pause yesterday is not a bad thing for Apple, but Apple's going to need to stay above the 440 area to really get going to the upside. And if we do break this upper end of this downtrend channel, then I think you have a beeline to the 500 in Apple. Lastly, the Qs, as you can see here, Qs hit this trend line again, but we're still in this sideways consolidation, and I think, of course, Apple does a lot to it. So if Apple is chopping around here, so is the Qs. But guys, it's going to be a 3-day weekend ahead of us. It's going to should be a slow grind up and or down. Look for volatility in stocks in the morning, and if you got some money in profits between 9:30 and 12, believe me, there's really no reason to trade the afternoon, especially for a 3-day weekend. Have a great day, everybody. We'll talk to you tomorrow. Take care.